I'm delighted to present Caledonia Mining Corporation to you. Here on the front page, you can see a picture of the new central shaft, the headgear for the central shaft, which we commissioned earlier on this year. And that marks the end of a 5-year investment program. More about that later, but it's a picture that we're very proud of. Here's the disclaimer, no more to say about that. But our strategy is really focused on four elements. The first is completion of the central shaft, which gives us near-term low-risk growth and will drive an increase in production up to about 80,000 ounces from 2022 onwards. So very, very close to achieving that now. Then, as you'll see, over the course of the last few years or so, we've demonstrated a clear commitment to return money to shareholders. We've paid a dividend for many years, and we're now beginning to increase that dividend as we get closer to realizing the increased cash flows coming out of central shaft. And in addition, we're also evaluating what we think are some quite attractive new opportunities, both in Zimbabwe and elsewhere. So moving on, just in terms of an overview, we are a highly profitable cash generative gold producer based at our current asset is the Blanket Mine in Gwanda, which is in the south of Zimbabwe. We also have an exploration option agreement over a property in the Zimbabwe Midlands around Gweru. As a company, we're a Jersey Channel Islands domicile company, which means that our dividend distributions don't suffer any withholding tax. Our main listing is on the NYSE, where we get the bulk of our liquidity, and we're also on the AIM in London, where liquidity is somewhat lower. At the end of June 2021, we had $16.7 million in cash, and we're currently trading on a PE of about 4.7 times our adjusted annualized Q2 2021 earnings. So very low valuation multiple. Last year's revenues were bang on $100 million, and this year we're looking at production guidance of between 61 and 67,000 ounces. That's quite a wide production guidance envelope, but that reflects the fact that we are in the middle of ramping up production as a result of the commissioning of the central shaft, and so we've given ourselves a fair degree of space for wiggle room. We've got a 900,000 ounce M&I resource and an additional 866,000 of inferred resource, which gives us a life of mine out to 2034. But we're very confident that we have further exploration potential at the mine and elsewhere. The word on the dividend, we've paid a dividend since 2012. And then late last year, early this year, we started to increase the dividend. So we've increased it from 6 7/8 cents a share, which was pretty much the constant rate over the last few years. And we've now increased that to the last dividend we paid in July was 13 cents a share. So that shows an 89% increase in the dividend distribution and puts us on a yield of 4.1%. However, corporate overview, that you see our share price performance. Our share price did run extremely strongly in the middle of 2020, partly as a result of general market exuberance and our inclusion in the Russell 3000 index. So our share price did, I think it reached a peak of just under $30 a share. Since then, it has come back a bit. But you can see that it's still trading substantially higher than where we were in 2017, 2018. And that reflects the increased market, the market's increased perception of the work that we're doing at Central Shaft and how close we are now to realizing the value of that investment. Our largest shareholder is a South African institution, Alan Gray. Management, they've got about 16%, and management and directors have got about 4%. We've got just over 12 million shares in issue, virtually no options outstanding. Cash at 16.7 million, so 16.3 is actually 16.7, and total assets of about 188 million, nearly 178 million dollars. No debt. We do the environmental social governance thing. We published our inaugural ESG report in July. We believe that we adhere to high standards of corporate governance and ethics. Health and safety is important. I think we've had now 3 million fatality-free shifts. All of our workers at the mine, 99%, probably 99.5% of the workers are Zimbabweans, and the workers also have a 10% direct interest in the mine itself. Our community relations are excellent, unlike in several other African jurisdictions, and the community has a direct 10% in the mine as well. and we believe that we adhere to the highest environmental standards. But as I say, all of further information on all of these areas is included in our ESG report. Just a quick word on COVID. COVID did have a effect on the completion of the central shaft project. It introduced a delay of about 3 or 4 months, which we've now worked through, and it's had virtually no effect on production. It had a small effect on costs, but frankly nothing really to talk about. So COVID, whilst we're very careful, we work hard to mitigate the effects. It has had no effect on our operations. By way of a case study, this is an example of a project that we sponsor for the benefit of the local community. It is a COVID isolation centre. We've embarked on a solar project. About the only significant operating difficulty we face in Zimbabwe is a poor quality of electricity supply. We suffer outages and also a very unstable voltage. So we have complete standby gensets, diesel gensets, which we can run all the operations and all the capital projects using diesel. It is somewhat expensive, but we can accommodate that. It is obviously environmentally dirty, which is becoming an increasing difficulty. But I guess the main risk is if we had to run the diesels for extended periods of time, say for many weeks, then we could well run into supply problems getting our hands on that amount of diesel. So to protect the mine and also to reduce our greenhouse gas emissions, we've now embarked on the first phase of a solar project, which is a project that's costing about $14 million, and will see Blanket secure about 27% of its average daily electricity demand from solar. That should be operational probably April next year, April 2022, and then thereafter we'll then consider further increases to that project to further reduce our reliance on the grid and our diesel usage. Well, turning to the central shaft, which is the main driver for value here. What we've done since 2015, we've sunk a 6-meter diameter 4-compartment shaft from surface to about 1,200 meters. That was commissioned in March, the end of March 2021, and now we're busy using that shaft infrastructure to do underground development towards the ore bodies. So we'd expect by the end of this year to have that new shaft hoisting ore, and it will allow us to increase our production rate from this year's target of 61 to 67,000 ounces up to about 80,000 ounces a year from 2022 onwards. It's cost us about $67 million since we started work on this in January 2015. All of that's been funded from internal cash flows. And the point of this central shaft is it gives us access to all resources below 750 meters, but it also gives us the ability to do further deep level exploration, and it reduces our operating costs because it's just a much more efficient way of mining. So to put some more detail on this, what you see here is a long section of the mining area. That's about 3 kilometers from left to right. The old infrastructure, the stuff in green, the number 4 shaft and the horizontal development in green that you see there above 750 meters, that's what was in place when we acquired the mine from Kinross in 2006. And what we've done since then is we've now sunk this central shaft in the middle of the mining area down to about 1,200 meters. And then we will have horizontal development on 3 levels in 2 directions. And you can see, without being a mining engineer, you can see this effectively creates a new mine underneath the old mine. And as I say, this mine has now been commissioned. We're finishing off that horizontal development, and we should start seeing real gold production coming from these areas by the end of this year. So it's a very exciting step forward for us. Looking at new opportunities, we believe that Zimbabwe is highly prospective for gold. There's been no significant exploration there really since the sort of 1960s. And so what we've done is we've acquired an option over, which gives us the ability to go exploring at a property called Connemara North. We've got 18 months to to do the exploring. And at the end of that 18-month period, which elapses in May next year, we then have the right to either exercise the option in secure control, full control over the asset, or to walk away. So we paid $300,000 to acquire the option, and if we exercise, that will be about $5 million. Previously, this Connemara North property was part of a slightly larger property that was owned by First Quantum and was placed on care and maintenance in 2001 and then disposed of by First Quantum in 2003 as the situation in Zimbabwe deteriorated. So we are optimistic that this Connemara North property will be beneficial for us. In addition, we also look at other opportunities both in Zimbabwe and elsewhere. In terms of CSR, we've had the CSR program is run by the mine itself, by Blanket Mine itself, and focuses on the areas of education, health, agriculture, environmental matters, and women and youth empowerment. Further details of that are set out in the ESG report, which, as I say, we published in July this year. So by way of an outlook, we are looking at a significant increase in production from the sort of 61 to 67,000 ounces that we're expecting this year in 2021 up to 80,000 ounces a year from 2022 onwards. That we expect will give rise to increased cash flows, not just as a result of higher production, but also lower unit costs and reduced capex. A very high proportion of our operating costs, and 90% of our costs are fixed. So every extra ounce that we produce costs us very little. So the effect of higher production on our cash generation is startlingly large. And we also expect to do more deep level exploration. So we're quietly confident that we can continue to grow the resource base at the mine and extend the mine life further beyond 2034. We've demonstrated over many years a commitment to pay a dividend, and more recently a commitment to increase that dividend as we get towards the end of the capital investment program and we see our cash flows begin to improve. And there's no reason why we should change from that policy of sharing incremental cash flows with shareholders whilst retaining some for further opportunities. There's no reason why that should change. Connemara North is the first of several opportunities that we believe we have in Zimbabwe, and we'll continue to look for other investment opportunities where we can deploy that surplus free cash for the benefit of shareholders. So here are contact details, myself and our VP Investor Relations, readily accessible, preferably by email, given time zone differences. In the UK, we have investment research from WH Ireland, and in the US, we have investment research from Cantor Fitzgerald. So with that, thank you very much.